Good morning and welcome to this session of the live coaching classes conducted by the Board of Studies of the Institute of Chartered Accountants of India. We are now in the process of understanding the provisions of the law relating to accounts of companies. So, Mr. Hitesh Jain is here. Good morning, sir. And others are also joining. Yes, Sushil, Memon, Rafiq Bhai, Pooja is here. Good morning and welcome. Without much ado, let me move on to the topic. I think we discussed quite a lot in the last session, and for clarification, absolutely. Startup private companies are also exempted from cash flow statement. I will update this PowerPoint and upload it. When I'm uploading it, I will update it, right? Moving on, in the last class, we came right up to this, right? Now, today, we'll be talking about consolidation of financial statements. Consolidation. I'm sure this is one more topic you've come across in maybe financial accounting or whatever, financial reporting or whatever you call it. Basically, the idea is the combined financial statements of a company and all of its subsidiaries and associated enterprises. See, where this company has, I'm sure you're already aware of the definition of an associated enterprise, where this company is having more than 20% in that company, paid up capital. That is also a substantial interest, and therefore you have to combine. So while presenting the financial statements to its stakeholders, the holding company or the company which we are auditing should provide two statements. One is the consolidated financial statement. The other is standalone. Standalone is only this company. So let us say we are presenting the financials of ABC Limited, which has 3 subsidiaries. Then one would be only ABC Limited, which is called the standalone accounts. The other would be the consolidated or combined financial statement. Both have to be given to the members of ABC Limited. Please be careful. Only the holding company has to do this. Subsidiary need not present its consolidated statement with the holding company. Only its own standalone. If it has chain subsidiaries, then those subsidiaries need to be consolidated here. Right. So, and I'm sure you're also familiar that in India, domestic companies cannot have more than 2 layers of subsidiaries. So ABC Limited, it's a subsidiary, then one more layer you can have. You can't have. Whereas companies incorporated outside India, which already have layers, can continue to have those layers. Okay, in case the Indian company is the holding company and the subsidiary is abroad, then that subsidiary can have more than one more layer, 2 more layers it can have. Okay, just to recap, that's all. To recap. Whatever it is, any number of subsidiaries, you have to sort of fold them back, bring them into main. Of course, you are experts in consolidated financial statements, how to combine main. See, the main issue here is the stake of this company in that company. What is the value of my investment there? As of the book. As per book value, what is my investment there? Is it there or it is gone? So that is the ultimate. And what is the stake of the outsiders there? The minorities or whoever, what is their stake? And we show it separately as a liability, right? So at a glance, my shareholders are clear that my investment there is worth only so much. The other party's stake is so much, like that. That's all. It's information, nothing more than that. So the consolidation of financial statements shall be made in accordance with the provisions of Schedule 3 and the applicable accounting standards. Okay, AS 21, if I'm right. I mean, I'm not teaching you financial reporting, so now I don't have to worry about all that. But I'm sure you know that. I'm sure by now somebody would put it up in the query pad. I know somebody would have put up the appropriate accounting standard and the Ind AS in the query pad. Why don't you do that? Educate me. Okay. For consolidation of financial statements. Right. Central government may provide for the consolidation of accounts of companies in such manner as may be prescribed under Rule 6. So, Rule 6 of the company's accounts rules you can go through, but not in, you need not know for the exam. So you should know that Rule 6. Okay. A company having one or more subsidiaries shall lay a CFS, Consolidated Financial Statement, along with standalone financial statements at every AGM. That's all they are saying, both. Right. So if you've done what I wanted you to do, if you have downloaded one of the financial statements, say Tata Motors or Dabur, you would have seen CFS also, because they all have subsidiaries. So they give consolidated financial statements also. You can go through Ashok Leyland, just have a look. My suggestion is do that. As part of your preparation for the examination, go through one complete financial statement of one company. That's all. Completely, page by page by page, line by line. Go through it and understand it. If you don't understand, if you are doing your articles, then ask your senior or somebody whom you have contact with. They will help you, explain it to you. Okay, so do that then. That way you will see your knowledge won't be just pure theoretical and bookish. It will be practical, which is how you will get more marks in the examination. The statement containing the salient feature of the financial statement of a company's subsidiary or subsidiaries or associate company or joint venture or ventures. Okay, it should be in AOC 1. Salient features of the financial statement of the company subsidiary. See, when a company has subsidiary or subsidiaries, associate company or companies, and joint venture or ventures, you can't go around giving the complete financials of those subsidiaries also. Once upon a time, it was like that. And once upon a time, associate companies and joint ventures were not consolidated. It was only subsidiary, pure subsidiary, where you held more than 51% of the shares of that company, the de jure subsidiary, you have to consolidate. And along with the consolidated, see, there will be a standalone holding, consolidated, and also subsidiary. The subsidiary full financials will be a huge thing. Okay, but now they are saying you don't have to give it in full. It is enough if you give a statement containing the salient feature, important points. Okay, and that format is AOC 1. That's all you have to know. AOC 1. See, all this could become relevant in financial reporting, where you would have to know the methodology, complete rules, and all that. Right? Otherwise, this will become financial reporting. Okay. The same provisions which are applicable to the standalone statement will also apply to the consolidated financials. Okay, the rules and presentation, right, etc., would also apply to this. Mutandis means with some changes as may be applicable. So you will have to make some changes which are necessary for the subsidiary. You have to, and consolidated financial you have to. Now, when I need not prepare CFS, Rule 6 gives me certain options when a company which is having subsidiaries need not consolidate, right? Very good. Mr. Ban Reddy downloaded Tata Motors. Excellent. Tata Motors is a good company. Go through. Excellent. Great, sir. Thank you. So, when a company may be exempted from preparation of CFS, members, including those not otherwise entitled to vote, means if you issued differential voting right shares which are not having the right to vote, even those people should not object. Members, including those not otherwise entitled to vote, because voting is only one thing. As a member, I have many rights. Attending an AGM and voting is one right, but receiving financial statements, receiving consolidated financial statements are other rights. Even though I may not have voting right, I am entitled to receive the financial statement, and I am entitled to come and attend the AGM and ask questions. Right? I cannot vote, but I am a member and I have right to ask. What I cannot do is I cannot vote. Only the regular shareholders who are having voting right will vote, because I am getting higher dividend or whatever reason I agreed not to have a vote. So therefore, those members also have the right to object. So none of the members, no members should object to the company not presenting CFS after receiving an intimation from company. So see, this will be applicable not for large listed companies. I'll tell you. Suppose a company has only 15 shareholders, 20 shareholders, or 100 shareholders. I just have to send a mail to all of them saying, hey, Baba, this is how it is. If you are saying okay, then we won't consolidate. And if they all agree and if they do not object, see, they need not agree. It's enough if they keep quiet. If they don't respond to the mail, then I can proceed. But if they even send one mail, one guy says, no, sorry, you have to give it, I have to give it. Okay. So the word used here is do not object. They are not agreeing is different from do not objecting. See, somebody does something, I may not agree, but I may keep quiet. That is called not objecting. Okay. Which, I mean, somebody is doing something, I don't agree, but I'm keeping quiet. I'm not objecting to what's happening. Sometimes, parents can do this. When one child is doing something, they won't correct that child. They'll simply keep quiet. That is not objecting. That's all. They won't agree. So later on, if they are caught and they ask, well, how did it happen? No. I didn't agree to what he did. Then why did you keep quiet? Because I have no objection. That's all. Something like that. Do not object to the but then. So at the time when he is asked, he should object. Again, it is a company whose securities are not listed or are not in the process of listing, whether in or outside. See, these are cumulative conditions. No objection. Listed company, no exemption. You have to consolidate, right? So you should not be listed company. Nor, see, if you are in the process of listing, for your information, maybe you'll read this in SEBI, when you're talking about SEBI and capital markets, any company which is in the process of listing has to revise its last 3 years financial statements. Whomever might have conducted the audit, last 3 years financial statements are to be re-audited and represented in the format of a listed company, including consolidated financial statement. Okay. So, a company in the process of listing is subject to the same regulations as the listed company as far as financial accounts are concerned. So that when they present the financial statements of the past 5 years in the prospectus, it should be in the format of a listed company format, right? So such a listed company is not exempted. Only unlisted company. Either it should not be listed and it should not be in the process of being listed. Okay. Its ultimate or any intermediate holding company files consolidated financial statements with the registrar, which are in compliance with the applicable accounting standards. Right. So this is a subsidiary. It is not listed. No member has objected. Its holding company is filing consolidated financial statement, or an intermediary holding company is filing financial statement. See, ABC Limited is the holding company, DEF Limited, one subsidiary, one layer. Okay, DEF Limited, XYZ, third layer. Now, XYZ need not consolidate. DEF need not consolidate with XYZ, provided ABC is filing consolidated financial statements, right? So some of these are fairly simple. I can just move on. The central government has also retained the power to exempt any company, even a single company can be exempted, or class of company from the operation of section 129 or the relevant rules for certain reasons, not for just like that they can't do it. Such exemption should be in public interest. For example, certain classes of companies, they might say you need not do this, you are exempted. Depends. For example, Nidhi companies have a lot of exemptions. Nidhi companies are finance, they are basically finance companies, but they will only deal with members. That is, they will accept deposits only from member. They will give loan only to member. So only members to member, interstate. That's why it's called mutual benefit fund. Nidhi companies are also called mutual benefit funds. So those cases, a lot of exemptions. So don't ask me what exemption or not. I'm just giving you an example of one example where they have exempted some provisions of the Act for some companies or a class of companies. So 129 is again a very, see, do you notice one thing? We've covered one whole class and then half an hour almost in this class. And we have yet to cover only 128, 129. Only 2 sections we have finished. So the very lengthy sections, each one of them, 128, 129, 134. Sorry. Lengthy, boring sections. Then what I suggest now, when you're attending this type of a class, this would be your first revision. You need not read again. Just listen to what I'm saying and observe the slides. And then when you're getting these slides, just go through them. And to an extent, you are ready for this topic. Because you won't find this is the density is not very high here for questions. In terms of density, the density is low here. But then questions are there, but density is low. Check it out. Okay. So, in case somebody is contravention of section 129, do you remember? This is, you saw it in 128 also. MD, whole-time director in charge of finance, CFO, any other person charged by the board with the duty of complying with 129. Suppose none of these guys are there. There is no managing director, there is no whole-time director, no CFO, nobody has been charged, then all the directors are liable collectively. Okay, here imprisonment is very much there. Don't see, there are some sections where they've removed the punishment by way of imprisonment. There are some sections, not all. So don't conclude blindly like that. All sections imprisonment over. No. Some still continue to have imprisonment or fine. Okay. 50,000 to 5 lakhs. Right. You'll notice one more thing. Normally penalty will apply to company also. Company and every officer. For 128, 129, you find only the persons are made. Obviously, because the company cannot have mind, they are not maintaining books and all, it cannot think. It's an artificial juridical person. Therefore, who is the person who took the decision to not to maintain or not to comply with accounting standard or do all nonsense? That fellow, that is the managing director, WTD, etc., are subject to imprisonment. Again, knee-jerk reaction from Satyam. Because Satyam, the falsification of accounts was initiated by no less than the managing director, the great Ramalinga Raju. Okay. Of course, don't tell me CFO was not involved in it. Don't tell me, if the CFO says he was not aware, shame. If the CFO is aware, very bad. He is criminal. So it's like that. You know, it's neither side you can go. You cannot say, I'm sorry, I don't know, like that. You notice one thing, one fellow is escaping here. The company secretary is not here. Okay. The company secretary is escaping. I think we should bring the company secretary also into this gang. Because the company secretary also will be involved in such frauds. He should also be brought here. Okay. 129A talks about periodical financial results. To put this in context, listed companies are already expected to provide quarterly financials as per the listing agreement. The minute they get listed with the NSE or BSE or whatever, they would have agreed to publish what is known as quarterly financial results. Right? For which, of course, you know the accounting standard is there, periodical financial. So for listed companies, already there. Therefore, here they are saying the central government, see, because SEBI will control listed companies. See, the general rule in company law is listed companies, the top notch is held by SEBI. SEBI will be controlling them. Most of the time SEBI, and central government will simply wait and watch. But if any offense is there under the Companies Act, then central government will come in and catch him. SEBI will first get chance. See, between the two, SEBI will get to hit him first. After he has survived SEBI, then central government will take over. And they will say, you have violated this section, that they'll catch him. See, it will all be in a combined. We'll see that. In fact, later on, when you come to final, you will see inspection and investigation, where you'll talk about the, this serious fraud investigation office, which is part of the Ministry of Corporate Affairs. But whenever possible, this listed company, immediately SEBI will also come in. And because they will see if any violation is there under the SEBI Act and they will catch it. So SEBI has a lot of control over listed companies. So this section is an enabling section where the central government may require such class or classes of unlisted companies as may be prescribed. No, not yet prescribed. This is only an enabling section. Central government may. In future, they may. Today, they will not. Sir, today getting one annual accounts audited is enough. If they want periodical basis and all, it's not going to happen. Maybe what they might do is they might prescribe certain classes of companies which are unlisted but substantial, big. And they might say you have to prepare maybe half-yearly accounts or whatever. To prepare the financial results of the company on such periodical basis and all that. Everything is as may be prescribed, as may be prescribed. And they have to obtain the approval of the board of directors and complete auditor or limited review of such periodical financial results in such manner. See, limited review is already there for listed companies. Whenever every quarter we do a limited review for a listed, as a statutory auditor, I will do limited review and I will certify the quarterly financial statements. Okay, so they may make it compulsory for unlisted also. Just like they want to bring dematerialization for unlisted companies also, but still many unlisted companies have not dematerialized their shares. Okay. Anyway. So then they have to file a copy of such periodical financial statements with the registrar within a period of 30 days of completion of the relevant period. So I'm assuming it's half yearly. It could be quarterly also. And they will upload it. See, as a member who is in practice doing audit and assurance attest function, I'm happy. If they bring something like this, it will become additional compliance. There are obviously additional fees for doing that. It's a waste of time, according to me. Unless the company is quite big and unlisted. So they might prescribe like 1,000 crore turnover minimum. See, otherwise, there's no point for this. There's no point. And less than 1,000 crore turnover or 100 crore paid up capital, there's no point in going here. That's what I would humbly suggest. Authentication of financial statement. Authentication means, okay, now we have Pooja PS has also come in. Good morning, all of you. Okay, if some of you feel Tata Motors is too boring, you try Ashok Leyland. Try Ashok Leyland Limited. That's nice statement. Dabur. Okay. If you want very, very small, minimum it will run into 100, 200 pages plus. See, one day or the other, you people are supposed to audit or prepare. See, either way. Either you will be an auditor, auditing it and certifying it, or you will be a CFO. Every one of you should aim to become CFO one day or the other. That is the highest position to which most of us can aspire. CEO is also there. Please, we can become CEO also. Chartered accountants are perfectly capable of being managing directors, and a lot of people are there already, members of our institute who are CEO, Chief Executive Officer. CFO is one of the goals. If so, then you will be on the other side preparing and monitoring the preparation, or this side auditing. Either way, you should be thorough in the content of the financial statement. And when is the best time to learn it? When you are still in intermediate. If you become strong here and lay the foundation, the superstructure can be easily built on top. And if subsequently the MCA changes it also, you know what to do. But the foundation is laid now in intermediate. So that is why I'm humbly requesting. See, even if you don't understand it, go through it. Let it sink. Okay, highlight things that you want to ask somebody. Slowly, aram se. Slowly the knowledge will go into you. And then when you come to final, reinforce it. Maybe take the same company and do it for final also when more knowledge is with you. This is how highly intelligent chartered accountant students do. Okay. Forget the run-of-the-mill sheep and goats, who go and sit in coaching classes, expect the coaching class to do whatever they want. No. In addition, you should also equip yourself with some knowledge. Okay, we have some questions. We have Mehman Rafiq Bhai. Sir, CFS prepared by subsidiary or holding? Holding company should prepare consolidated financial statements along with its subsidiary. If there are chain subsidiaries, then you should consolidate one subsidiary into the upper one, then this will get into the main one. That's called chain holdings. Very complicated, but you have to do that. In this section 129, is there any one penalty is imposed? Yeah, we saw na penalty is there na? Penalty hai na? If that is your question, this is the answer. My inability to understand your question. Okay. Now, authentication means signing. Signing of financial statements. Signing. Okay. Financial statement including consolidated financial statement, if any, shall be approved by the board of directors. So before it is sent for audit, please understand the sequence. The financial statements are prepared. Of course, in principle, we complete the audit, but we don't sign. I won't sign. My people will verify, top sheet discussion, CFO, myself and CFO, one sitting round will go, third level, fourth level discussion, final statement, which can go to the board. So that will be almost 100% correct, because the board will ask, that MD will ask me as a statutory auditor, Srikanth, are you satisfied? Will you sign? I said, sir, I will sign, but first you sign. Only then I will sign. Because before I go to jail, you go to jail. Okay, so they have to sign. So that will when it will go to the board meeting. Sometimes questions can be asked at the board level also, and changes can happen, but rarely, because by then much of it would have been discussed informally, and so that the board meeting will only be a formality. So when it goes to a board meeting, it has to be signed by the board at that board meeting. So that only when the board has signed, I will sign. When I say I am saying as any member of the institute who is in a statutory auditor. Okay, don't think I'm saying I. It's not like that. But so that I am strict. In fact, I will see to it that they sign. Unless their signature is there, I won't even touch the paper. And so when it comes to me for signing, I should see who signed. I should see. That is why you should also know it as a future member. You should know who should sign. Okay. So who should sign it? Chairperson of the board. There will be a chairperson of the board. We are authorized by the board. So chairperson, if there, he can sign. That's all. Only one sign of chairperson is enough. In case chairperson is not there, then, but that chairperson should be authorized by the board. So there will be a board resolution authorizing the chairperson to sign. No problem. Or two directors, out of which one shall be managing director, if any. So the second option is the more popular option. I rarely find chairperson signing it. Check it out in Tata Motors also. See, these are small things. Check out in Tata Motors who has signed. Who has signed. Check out if all these people have signed it. It should be signed by a chairperson or two directors. It should be signed by the chief executive officer if such a person has been appointed. It should be signed by chief financial officer. Okay. It should be signed by company secretary. You should not let that fellow go. Company secretary also is liable. Okay. He is signing here. I don't know why he is exempted in 129. Everywhere he should be cut. These are the criminals. These are the fellows who instigate the management to do all sorts of fraud. And then they try to put the blame on the auditor and the chartered accountants. So they should be cut because they don't know accounting. They don't know principles of finance and accounting. Simply they'll come and talk nonsense, bullshit they will talk, and then they will prepare some statement and then ask. That is why whenever I audit, I say, Mr. Company Secretary, if you are aware of subject, you come. Otherwise, stand aside, I will talk to you. If the CFO is there, I'll talk. But in one or two situations, you will find that the chartered accountant will also be the company secretary. What happens now? He will be CFO and the company secretary. How? He both qualifications. He'll be a chartered accountant and a company secretary. Then, ideal. Because then he is a CFO come company secretary. Below him, there will be one guy who does the actual secretarial work. Who would be a normal company secretary. The CFO would also be a company secretary. In those cases, absolutely no problem. Because there he is a CFO. He is a member of my institute. I can talk to him. Okay, he will understand what I am telling. If you think that I am being a little arrogant, if I think that I am being a little, believe me, once you become a member, you will also understand what I am talking about here. That sense of pride, will automatically come to you once you become a member of our institute. Because you will be the possessor of extremely specialized knowledge. Okay. So when an amateur or a non-specialist comes and talks something, you feel a little irritated. Tell him, boss, if you think you know anything about accountancy, become a member of my institute. Then I will listen to you. Okay. Just don't read some Google or some WhatsApp or internet and then come and talk to me about taxation or finance. Go through the process, then you will understand the fundamentals. Then you will understand what this is all about. What I normally say. Of course, when I made some very, very nasty comment about company secretaries, always there are exceptions. There are company secretaries who are very brilliant, especially from company law point of view. They are very brilliant, no doubt about it. But it's only when they try to get into other areas only we have to be very careful. That's all I would like to say. Now, in the case of one-person company, it is sufficient if only one director signs. See, the company may have only one director also. Even if it has three directors, it is enough if one signs. Okay, good. See, if I'm asking a multiple choice question, you know what I will do? I will ask you, which of the following is not entitled to sign or not necessary to sign like that? And I will include one of the other than this. Right? Something like that. The audit, see, did you notice, did you listen when I was talking about attaching and annexing? The auditor's report shall be attached. In the last class, I talked about attaching and annexing. And I gave the example of attaching is when you put a clip. Annexing is when you put a staple. So, balance sheet, P&L or income and expenditure, the notes annexed to or forming part of it, they are one set. Annexed So the minute you hear the word annexed, remember it forms part of the financial statement. And by extension, the auditor's report covers it. Whereas anything which is attached, no. Okay. So the auditor's report is attached. The board of directors report is attached. But everything else is annexed. The notes are annexed. A lot of schedules are annexed. Okay, all are annexed. Always keep your ears and eyes open for these two words. If it is attached, annexed. Which is why board of directors can tell anything in their report. As an auditor, I don't have anything to do with it. My report does not extend there. With one or two rare exceptions, my report has nothing to do with their board report. In fact, there could be one area where he and I will compete. In the sense, I would qualify. My auditor's report, I would qualify. Whereas in his board's report, he can give explanation. He can give a reason why it is like that. In fact, he has to. We will see that. In the board, in the director's report, he has to mention all this. The board's report shall be based on the standalone financial statement of the company and shall report on the highlights of performance of subsidiaries. See, those of you who are using Tata Motors board's report, just go through the board report. See what they are talking about their subsidiaries, etc., etc. Go through it. And shall report on the highlights of performance of subsidiaries, etc., and their contribution to the overall performance of the company. See, the board of directors report preparation is a company secretary job. 100%. We should not even go there and get into it. It is between the company secretary and the board. He prepares it and gives it. His team prepares it. So a lot of data has to go there. Some data is financial. To the extent that it is financial, we will support. Right? Of course, very intelligent company secretary along with a very intelligent chartered accountant can make the company extraordinarily successful. These two guys working in tandem. But the problem is those guys don't work in tandem. They work always against. They come and do all some nonsense and they'll run away. They'll burst a cracker, put it and then run away. It's an unfortunate habit of these gentlemen. Who has to sign first? Board of directors or others? I think who is the only other there? Yeah, there's only one other is there. That is auditor, statutory auditor. Other than that, nobody will sign that. And first board of directors, director, all these fellows should sign. Every one of them should sign. All their signatures should be there. All the pages. Only then auditor. Only then auditor. That's all. And only one guy, the partner of the audit firm or the proprietor of the auditor who is a proprietor, that one gentleman will sign. He will give the firm a membership number, or if it's a firm, the firm registration number and his membership number. And it will be, UDIN will be generated and signed. That's all. One sign. Pehle board. Baad me. Not the other way around. Where to download? You go to, just go to Google, whichever way only Tata Motors, you just put Dabur, whatever, it will go to their website. There look for financials, or else you go to moneycontrol.com, there search for Tata Motors, then go to Tata Motors ka sheet, there you will find financials. Many ways are there. But there they will give you only, they also provide the complete PDF of the financial statement also. There are a lot of this. Just go on Google. Use Google as for studies also. Now we come to Board of Directors report 134.3. See, this so many things are to be there in the director's report. Okay. Most boring. No, I don't even want to go there, but still you should know. You should know what are the matters to be included in the Board of Directors report. Okay. So the Board of Directors report, see, when you go through the Board of Directors report, it won't be like this. It will be very elaborate. See, the Directors report is a letter written by the directors to the shareholders once in a year. It's a love letter written by the directors to the shareholders once in a year, where the directors are informing the shareholders about what has happened to this company in the last 1 year. How did this company fare in the last 1 year? How did it do? That is all. That is the sum and substance of the director's report. So the wordings also will be like that. They will say, your company has done this. Your company has done this. In addition to this, see, if you don't put such conditions, what these fellows will do, they will write a letter that gives a rosy picture. They will suppress all the wrong things and they will put all the great information. There are a lot of people, see, when they talk about themselves, they will never talk about the negative. They will only tell positive, which is good. I agree. But sometimes it's also misleading. Okay. So what are the matters to be conducted? Given the web address, if any, where annual return has been placed. So you should say, if you want to download the annual return, you go to that web address. Number of board meetings. How many times did the board meet? Director's responsibility report. This is going to be discussed in detail. I'll talk about it in another slide in detail. Director's responsibility report. We'll talk about. That's why I've highlighted it in detail. It's very important from the exam point of view. Also very important. We'll come to that. Details of fraud reported by auditors. In case, see, do you remember your CARO? One of the duties of the auditor is to report whether there is any fraud committed by or on the company. Even company could have committed or somebody could have committed on the company, whatever. If the auditors come across any fraud, they would have reported. Also, there is a statutory duty under the Companies Act. We'll be seeing it when we come to auditors, where if the auditors discover any fraud, they have to report it to the audit committee. If they are not getting any action, then they can go to the ministry. So whatever it is, the board of directors should address that and say, auditors reported this. Yes, there was a fraud in the company. Employees have committed. So many banks, private banks, there are a lot of frauds being committed. Recently, I saw HDFC Bank employees have committed a fraud. Okay, very localized fraud. It's not a across the bank fraud, but localized. But then it's a fraud. Again, my dear friends, materiality also needs to be considered, right? So how big is it and all? But if it is substantial and the auditors have reported it, then even the auditor may want to take a call on materiality. Okay. Depending on the nature of the fraud. You see, sometimes materiality yardstick cannot be applied to all frauds. Some fraud may not be huge in terms of value, but in terms of systemic weakness, it may be extraordinarily important. It may be a crux that could bring the downfall of the company, etc. Okay, so it's a call. It's a very, very delicate call. Okay, fraud is in audit. See, when you come to auditing, this topic you will discuss. Fraud, forensic audit. What happens when a fraud is discovered? How do you look for a fraud? When do you know that there is a fraud like that? It's a very interesting area in auditing. Very practical also. Again, you cannot mug up and vomit for that type of a topic. You should have some knowledge of, see, even if you don't have experience in fraud or forensic audit, you should know how systems work. See, when you go for an audit of a large company, don't just vouch. Don't just keep ticking the papers and looking at the SAP and data and all that. Yes, data is important, but also move around that company and see how the company functions, the various, touch points and how it functions and who has authority. That is important. That is where the secret is. If you keep on sitting in front of a computer going through the data, hey, that is not auditing. That is not auditing. That is bean counting. Okay, that's not auditing. Yeah, there is amount of data crunching. We'll do that. We can even have a bot to do it. You don't need a human being for that. What a human being has to do is to understand the culture. What's happening here? Something is wrong in the country of Denmark. You should know that well in advance. By sniffing, you will know it. Then it's only a matter of touching. See, you know the touch points where the weakness is there. You go and verify there. You will get your evidence. But then, unless you have the feel for it, my dear friends, very difficult. Sorry, I know I'm wasting your time talking about audit, but I'm saying, okay, so when we discover a fraud and we report it, it is the duty of the directors to report it in the board of directors. There's also a declaration by the independent directors as to their independence. What is independent director? You will come across it in final exam, not in this syllabus. But basically, just to help you understand, don't go too deep and waste your time. It's not part of the syllabus. Basically, independence is financial independence. Independent directors are people who are not financially dependent on the company. They are not having any financial interest or financial link with the company, pecuniary or financial link. Of course, elaborate definitions there, elaborate conditions are there. 1693 is there. It's very elaborate. You will come across it when you come to final. As of now, what you should know is independent directors are those who are financially independent. They do not have any financial dependence. Of course, otherwise than as directors. As a director, he is entitled to remuneration. Other than that, no other, for example, Mr. A is a consultant and a director, then he is not independent. Because in addition to being a director, he is also a consultant. So as a consultant, he's got a stake, right? So if it's a huge consulting assignment, he will keep quiet. If the MD is doing some nonsense, he'll keep quiet. Why? Because his bread is buttered on that side, right? He can't do anything. He keep chup. He can't talk. Okay. So such people are not independent. Now, law has made it compulsory that listed companies and certain large companies, compulsorily they should have independent directors. Compulsory. Okay. That you will learn more when you come to the final syllabus. Don't worry about it. Such directors have to confirm in the director's report that they are retaining their independence, that they do not have any financial link like that. Okay. Also, comments by the board on remarks made by the auditor and company secretary. Means, auditor or company secretary might have made any negative remarks or qualifications in the report. If there is a secretarial audit, the company secretary might have qualified. If financial audit, auditor. In these two cases, the board should give their view, what it means and all that. Okay. They may have a view and they can express that. And thereafter is a shareholder's view decided. See, auditor cannot insist. He can only say this is wrong and he can give why it's wrong. Board of directors can give an opinion and say, see, most of the time it will be relating to provisions. See, we will say it's liable. They will say it's not, they are not liable. They will get legal opinion from some big advocate that we'll take that opinion. Sometimes we might be protected by that. Sometimes we might feel that advocate's opinion doesn't protect me. Tomorrow my professional thing. So I will say make a provision for that. They won't make a provision. I'll say at least disclose in contingent liability. They'll do that. But still I feel that provision should be made. I may qualify. Got it? This is how qualifications happen. Then they will say auditor is qualified. Nevertheless, we have got strong grounds to believe that we'll be successful. The provision is not needed. That is their view. It is up to the shareholders now to decide who is right or which to follow. Auditor or directors. Particulars of contracts or arrangements with related parties. Right? There is a format for this AOC 2. Section 188 is not in your syllabus, which deals with related party transactions. When you come to final, you will learn. See, there's a lot of link between final syllabus here. So to that extent, you will have to accept it. Related party transaction, you know very well. Any contract with a person who has some stake in that company, any relationship with the company. Who is a related party? I have a strong feeling you studied it in definitions. I hope you did. So when you're having a contract arrangement with those related parties, then you have to disclose it in the director's report in form AOC 2, so that everybody will know what it is. Amount carrying reserves are paid by way of dividend. It's very important part of the board. Everybody is looking at this. How much are you going to transfer to reserves as a board and how much are you going to pay? See, this is a pure board ka discretion. Today, as by now you might have studied in dividend topic, there is no compulsory transfer of profits to reserves. Transfer of profits to reserves is the discretion of the board. Dividend is the discretion of the board. The shareholders will only approve or adopt the dividend that the directors have recommended. Or lesser. They cannot themselves declare a dividend because, see, they are running the day-to-day affairs. They know how to run. They know better how much to give, how much to keep. Shareholders cannot take that call. But once the recommendation has come, they can either take the whatever is recommended or lower, but not higher. Okay. Also, in case of any conservation of energy, technology absorption, foreign exchange, they have to report it. How much foreign exchange have you earned for this country? How much foreign exchange have you spent? How much import? How much are you dependent on imports? How have you substituted imports? How you have saved energy? Also, in case you got a foreign collaboration agreement, how have you absorbed that technology? Or are you still dependent? Are you still paying a royalty to your foreign collaborator? Or have you absorbed the technology and sort of slowly come out of the clutches of the foreign collaborator? Many companies in India today are out of those foreign collaborations. Today, most Indian companies have their own technology. They are in fact technology leaders across the world rather than the other way around. In fact, we've got companies like Tata Motors who have got patents which they lease out to other companies. Thanks to Tata Motors' decision to acquire JLR, Jaguar Land Rover, they've got a lot of patents now which they lease out to companies, including Ford, which was originally owning JLR. CSR policy. Later on, we'll be talking about corporate social responsibility. Now, the board of directors report should mention the CSR policy and what are they doing in that regard. The company's policy on directors' appointment and remuneration. So, whether there's a selection committee, whether there's a remuneration committee, what is the procedure? Just brief note on that. Particulars of loans, guarantees, or investments given to related parties. That is not mentioned there, but that also should be clearly mentioned. If any director has been given a loan or a company in which we are interested has been given, disclose. The state of company's affairs. This is a story. What happened for the last 1 year? How did you fare? So that in simple words, they are trying to explain it to the shareholders. Material change affecting the financial position. If at all, anything has happened. From the balance sheet date till the date of AGM. Between that, if any material change has happened, they have to disclose it. Development and implementation of risk management. Okay. See, this itself is a notion of a topic. Today, internal audit is now gone. Though we use the word internal audit, basically internal audit is the part and parcel of the risk management function, right? So what is the risk? Commercial risk, okay, currency risk, all that, okay, commodity risk. Where are you? How sensitive are you to it? How resilient are you in handling it? Okay, will that risk destroy you, or will it? Have you got methods by which you can overcome that risk, or how are you overcoming it? It's a big question. In fact, this is one specialization area for us. Many CAs specialize in risk management. Okay, which is a specialization topic by itself. Other matters as may be prescribed. There are some things prescribed. We'll see that. Okay, listed or other public companies having paid up share capital of 25 crore or more shall contain statement indicating the manner in which the format of the annual evaluation of performance of the board, its committees, and of individual directors has been made. So, listed companies and public companies having paid up share capital of 25 or more. See, you and I, when we become employees of companies, we are evaluated, right? End of the year, we have performance evaluation. Same way, ministry wants the board effectiveness to be reviewed and individual directors. This will be done by a multinational firm or by a consulting firm who will come and evaluate the strategy. See, when you are evaluating the board, we are not going to ask him, did you come on time? Did you go on time? No. We are more interested in asking, what was the strategy? How did you understand the environment? How did you design a strategy? How did that strategy work? Why did it not work? What are you doing to correct it? So on and so forth. This is how we have to evaluate the performance of the board. That is compulsory for listed companies and public companies having paid up share capital of 25 crore or more. I know this is a little boring, right? But then if you've gone through it with me, this stuff with me, you don't have to again waste your time. You just read it once, it is enough. Which is why possibly there are no queries also. I think many of you went to sleep and then now only woke up. Okay. Where disclosures referred to in this subsection have been included in the financial statements, such disclosures shall be referred to instead of being repeated in the board's report. See, many times the data that is needed in the director's report may already be available in the financial statement. In the notes, they can refer to the note. Nothing wrong. Where the company's policy on director's appointment and remuneration and regarding CSR is made available on company's website, it is okay if you just give the web address. Okay, give the salient features, and then if you want to know more, go to the website. That's all. Matter over. Abridged board's report. See, again, this is the addition may prescribe an abridged board's report for the compliance of this section by one-person company or small company. Okay. In the case of OPC, one-person company, the report of the board to be attached to the financial statement shall mean a report containing explanations or comment by the board on every qualification, reservation, or adverse remark or disclosure made by the auditor in his report. That's all. See, why, if in the case of an OPC, what report will be given here? Suppose he is the director and he is also the shareholder, he will give report to himself. Of course, as an idea it works, but in reality it's foolish, no? So they have exempted. Maximum they are saying, if at all there is any report, it should be only with respect to qualifications, right? Though it is quite possible that there could be a dichotomy between director and owner of an OPC. Even then, what are you? Just go to the pub and have a conversation. That is enough. What report and all that? Seriously. Okay, your thing. So OPC is given some kind of a relaxation. Beautiful. We've come to a very, very important part of our, shall we say, topic, director's responsibility statement. Okay. Mahadev Bharadwaj confirms, no sir, not sleeping. Okay. Theory, very huge theory part, this one. You have to go through it. That's why, by saying, I asking you whether you are sleeping, I am asking you don't sleep. Okay. The director's responsibility statement. See, the idea is this. What we are going to see now is implied, is implicit. Directors are jolly well supposed to do this. But many of them, they will come out and say, hey, we didn't know this, yeah. We never knew we are responsible for this. So now we are telling very clearly in the act, Baba, you are responsible for this. And in the board report, you jolly well confirm that you have done it. So if you do not confirm it, it means that you have not done it, means you are liable. So the first thing is, the applicable accounting standards had been followed along with proper explanation. See, some directors even now will be telling accounting standards, that is chartered accountant, auditor ka kam hai na, it is auditor's job. Correct? No. His job is to ensure that you are complying with the accounting standards. Your job is to apply those standards and prepare the accounts in accordance with those standards. Okay? So that you have to confirm. Of course, today the awareness is there, but still many people don't know the fact that there are many companies, which are especially people where the MD is a person who is not qualified, who's come from the business, he is businessman, ultimate rags to riches story. They try to act as if they don't know and all that. But sometimes, when I have these conversations with these self-made millionaires, I ask them, boss, common sense is there now. Most of the accounting standards are only common sense. If you understand common sense, you will understand accounting standard. You don't have to be of course, most of us love to make it into some sort of an esoteric subject. But at the heart of every accounting standard is a very, very important common sense. Once that common sense is understood, thereafter it's only English and, jargon and all that. Okay, so I explain the common sense to them and say, look here, essence of it is this. Are you complying? Are you there? No, Srikanth, you are not able to understand. Okay, that is different. You don't say you don't know. Valuation of inventory. You know the basic principles in what? Cost or market value, whichever is lower. It is not at your convenience. So if you want it to be at your convenience, then that is not common sense, right? Consistently, you have to follow the same policy. This year you want to change it, disclose, give the effect. No. Then everything is out of the thing. Exactly the point. See, your shareholders should know. So that if you are falsifying the result through some gimmickry, your disclosure will take care of it. That's all. Okay. Anyway, the directors had selected such accounting policies and applied them consistently and made judgments and estimates that are reasonable and prudent Is what I was telling. See, so as to give a true and fair view of the state of affairs of the company, which means true and fair view is not auditor's job. The accounts should be prepared in such a manner as to give a true and fair view of the state of affairs of the company at the end of the financial year and the P&L for that period. So, but it's a director's responsibility. So statutory auditor is only auditing. He's only finding out and saying, if the directors have not done it and the auditor has not pointed out, then the auditor is liable. Because then, but if directors have to do it first, they cannot say, I was not aware. No. Right? For which they have to hire chartered accountants. If they don't know, then they have to entrust it to a member. They have to call a chartered accountant, ask him to do it. They have to pay the salary, ensure that he does the job well. Okay, that is all. The directors have taken proper and sufficient care for the maintenance of adequate accounting records in accordance with the provisions of this Act for safeguarding the assets of the company and for preventing and detecting fraud. See, they give this declaration so that if tomorrow something happens, they can be caught and say, hey, you said it's all paka. How come this happened? They can be punished for that, giving a false statement. The directors have prepared the annual accounts on a going concern basis. I don't want to go deep into going concern. I'm sure you are familiar with going concern. So if it is not a going concern, here is your opportunity to inform. Of course, the auditor also has to confirm that it is a going concern. Here is the opportunity for the directors to confirm that whether it is a going concern. That is, the company will be financially solvent and running during the immediately foreseeable future. Immediately foreseeable future, the company will be solvent and running. It is a going concern. This is a call that the directors have to take. If they feel it's insolvent or not a going concern, they have to come out and say, sorry, we have managed this company so badly that it has to be wound up. So this year we are going to do that. So accounts are not prepared on going concern basis. It's prepared on cash basis. Okay. So we have given you the value that you will get in case everything is sold and the liabilities. Finally, what you have? Nothing. Informing you. The directors in the case of a listed company had laid down internal financial controls, and that such internal financial controls are adequate and were operating effectively. So many times when I take up an audit, the company does not have such controls. What I do is, I don't audit. I call a consulting company not connected with me, and I tell them, please hire these guys. Ask them to give you financial controls first. Let that come, implement it. 6 months down the line, we'll start the audit. Because now if you audit it, your controls are not there. What's the point of my audit? Okay, audit is not just audit of documents. Audit is audit of process and the manner in which the financial transactions are effected and accounted. So unless that process is there, simply preparing some tally accounts and then checking it is not audit. Sorry. The directors have devised proper systems to ensure compliance with the provisions of all applicable laws. All, you see, you noticed I have highlighted that. Huh? All applicable laws. Every law in this country you should have complied. Okay, and that such systems are adequate and operating, which is why once the company reaches a certain higher level, better to have legal advisors, better to have a due diligence continuously prepared, conducted, so that the legal advisors will give you clarity whether you are complying with the law or not. Whenever there's a doubt, consult a lawyer so that you will get clarity on the law and then ensure that you are complying with the law. The board's report and any annexures thereto shall be signed by the board's report. See, earlier we saw financial statement. Yeah, earlier we saw financial statement. This is financial statement. Now the board's report, who will sign? Board's report will be signed by, obviously, the chairperson. In case he is there, authorized by the board. Or 2 directors, out of which one shall be managing director, if any. Board director's report is only signed by them. Only the financial statement is signed by CFO, CEO, company secretary. I always enjoy it when I say company secretary. That fellow also should be made liable. Because they keep talking as if, all chartered accountants are frauds like that. As if they are all, so innocent and pure as driven snow. Okay. 134.8 has a penalty. The company also. Okay. Here, company is also liable for punishment. Okay. 3 lakhs. Because as a company, they have to pay for not complying with 134. And every officer, 50,000 rupees. Right? Good. Now, we move on to another topic. I'm very happy. We are making good progress. And inshallah, I hope to complete this topic where I want to go today by 9:30. I hope to do it. Of course, so we will give ourselves the luxury of a break at 8:30, right? 8:30 we'll have a break, small break. This is about the right to members to copies of audited financial statement. So it is the duty of a company to provide copies of audited financial statements. Please note, not just a financial statement, audited financial statement. Okay. So copies of audited financial statement, consolidated financial statement, auditor's report, everything. Other documents should be sent to, including director's report. Don't ask me. Director's report also. Everything should be sent to every member. Every member, whether he has right to vote or not, he is entitled to this. Every trustee for debenture holder, every trustee, I'm so sorry. Every trustee, how is these typos creeping? Every trustee for debenture holders. Yes. Okay, sorry about that. I corrected it now only. Other persons like whoever is entitled, for example, SEBI, listed, if you're listed with the stock exchange. See, these are contractual. Please understand, other persons are all contractual. That is, whenever you borrow money from a bank, one of the conditions in that loan agreement will be every year you have to file annual financial statements, audited financial statements. When you borrow money, it's part of the contract. When you see, you may also the income tax department. Every company has to file at the time along with the return. You have to upload your annual financial statement, audited financial statement, like that. Okay. The financial statement should be circulated to these people not less than 21 days before the general meeting, which is why go back to meetings and management and administration. AGM ka notice should be served 21 clear days. Here they are not talking about clear days, but basically it's clear days. So along with your AGM notice, you should send a financial statement, etc. So ideally, your notice for AGM, along with that in a book form, you should put. If you notice, see, since you have downloaded the financial statements of Tata Motors, you will check it up. You will find that the AGM notice is also there. First page will be the AGM notice. Okay, in the book format, the AGM notice also will be there. Just check up and see, you will get it. Okay. Okay. So, for Section 8 company, if you remember, AGM notice could be given 14 clear days before the meeting. So, there was an exemption for Section 8 companies there. Same thing will be applicable here also. The financial statement also can be sent 14 days before the date of AGM. Right? So, this is linked, which means these two are very closely linked. Okay, AGM, one of the important matters that will happen at the AGM is adoption of financial statement, together with the auditor's report, director's report, etc. One of the important items of agenda. In fact, members have the right to ask questions. You can attend and ask questions. Okay, when you are attending the virtual meetings, if you remember, I showed you the virtual meeting notice and electronic voting, e-voting. I showed you. There, one of the important things you are entitled to do is to ask questions. So they cannot prevent you, especially in e-voting. Even if you have e-voted, you can come and ask a question here. Because you can exercise your vote on e-voting. Still, you can come and ask a question in the AG. It's an inalienable right of a member to ask questions, and the duty of the directors to give a reasonably fair reply. But then if this fellow is badgering you and, keeping on asking the same question, irritating, then you can avoid and go. For all this, who has the ultimate control, Who has the ultimate control in conduct of the meeting? This is a question I'm going to ask you. Whether you remember your management and administration, let us see. And also to ensure that you're not sleeping. I know you're not. I know some of you are confirmed. But one way I will know is if you put up an answer. At the general meeting of a company, who has ultimate control over the conduct of the meeting? Question. I'm waiting for answers on the query pad. Who will decide whether to, suppose a question is being asked, you keep on asking, donkey is badgering you, then who decides? Enough, sir. Question has been answered. Please sit down. Who is the person who will decide this? Yes, got an answer. Mahadev Bharadwaj. Let us see if more people can put up the same answer. Immediately, Mahadev Bharadwaj just put up the right answer. And he's using the politically correct terminology also. He's not putting chairman, he's putting chairperson. Could be a lady also. Okay. Absolutely correct, Ji. So, still waiting for more people to put up, yeah? You think nobody is listening? No problem. You can always download it and watch it. Chairman. Some of you are using chairman. I find Dhanupriya is using chairman. Madam, you should be a little more feminist than that, yeah? Use the word chairperson. You use the neutral gender. Never use male gender. Though, later on unfortunately, in the General Clauses Act, you will find words indicating the male gender include the female gender. Okay, chairman includes chairwoman also, chair lady also, whatever. But we should slowly, one more generation. You people are in between. You should become more gender sensitive. Okay, as we go on in our world, in the brave new world which your children will inherit, there will be more and more gender sensitivity and gender neutrality. Men and women will be doing similar jobs in similar situations. Okay, science and technology will ensure that there will be no great differentiation between the jobs that men can do and the jobs women can do. All will be doing all. In which case, we should start practicing more and more gender sensitivity and gender neutrality. More than sensitivity, neutrality. You don't have to give special consideration for a lady, which is simply, she's a colleague. Treat her as a colleague. That's all. With the respect due to any colleague, give her the same respect that you will give to another colleague. That's about it. Okay. Good. Occasionally, even though I have been sufficiently warned by Swati, I keep giving this useless information. But then I thought it's to keep you awake and not go to sleep. Okay. How is it to be sent? Right? Financial, in those days, when I say in those days, I mean 90s. Okay. For me, 90s. Yeah. Annual reports used to be printed and sent by post. Can you imagine? I was 90s. I was a member of about 25 companies. So every year I will get 25 annual reports and where to keep it. Initially it was all fun. I used to have 5 years and then I used to refer and all. It used to be a big thing to have all these annual reports and all. Because in those days there was no website. There was not. See, today you are simply just going there and downloading Tata Motors annual report. In those days, getting Tata Motors annual report was difficult. You should either be a shareholder or you should know somebody, or our institute know. When I say, I don't know about other regions, but in southern region, our institute had a very powerful annual report library. In fact, many capital market researchers used to come to SARC building and while they are doing research theses, because what happened now, our institute encouraged members, because ultimately CFO is a member, right? Or director of finance will be a member. So they will send a copy to the institute as a, sort of special copy. Once the AGM is over, they will send it to the adopted accounts will be sent, printed copy. And institute used to have a huge library of annual reports. So when you wanted to analyze a company, a fundamental analysis, we used to go to the institute and physically we used to take it out, look at the balance sheet, copy down. No Excel, all crunching. We'll have a notepad, calculator, ratios have to be crunched. See, today you are living in a totally different world. Okay. Anyway, so in those days it was like that, physical. But today, thanks to electronic media, you can send it by electronic media also, right? So let us see. Financial statements are to be sent not less than 21 days before the date of meeting. We saw that. But suppose the copies of the document are sent less than 21 days before the meeting, then they shall, notwithstanding that fact, be deemed to have been duly sent. That is, do you remember when we talked about annual general meeting, we also talked about shorter notice. 21 days notice has to be given, but shorter notice can be given provided the requisite majority agree. Similarly, financial statements can be sent less than 21 days before the date of meeting, provided this is agreed to by the requisite number of members. So in the case of a company having share capital, by a majority in number entitled to vote, by a majority in number entitled to vote, representing not less than 95% in value of the paid up capital. So two conditions. One, those agreeing should be a majority in number. Also, they should hold not less than 95% in value of the paid up capital, right? For a company having share capital. Company not having share capital, members having not less than 95% of the total voting power, not less than. So you should calculate 95% and the number of members should be more than that number. Okay, even if it's a decimal, no problem. When you're finding out 95%, you might get a decimal, no problem. The number of members who are agreeing should be more than that number, that's all. Okay, it need not be exactly that. So how I will get 3/4, sir? You don't have to get 3/4. You get one above. Suppose you get 165 and 3/4. No, you can't get 165. That's exactly. If you get 166 members, enough. Because 166 is more than 165 and 3/4. Okay. No problem if you get a fraction. Because it's not less than, right? That number. It may be exactly the number good, otherwise more. More, it can be more, no? Not less than is the answer. Beautiful. Now, here's the problem for you to consider. Navayug Chemicals Limited, an enlisted public company, has 200 members. Its paid up share capital is 50 lakhs, consisting of 5 lakh shares of rupees 10 each. The company is proposing to hold its AGM on 28/9/2021. There is a delay in submission of accounts for audit, and hence the auditor's fault on delaying. So no, he's not conducting the audit correctly. Delay. No. Have you given all the details? Whatever. Okay. And hence, signed financial statements were ready only on 10/9/2021. So, 21 days is not possible because we already going to hold it on 28/9. The company has obtained the consent of 160 members who are holding 45 lakhs PUC. Can they proceed to circulate the financial statements less than 21 days before the meeting? Okay. Yeah, many of you have given the correct answer, Chairperson. Now, give the answer for this question. I can always explain, but I'm waiting for you to give. Even if one or two people give an answer, so if the question is, can they proceed? So you can even just say yes, no. They can, they cannot. If you say they cannot, if you say they can, you can give. Yes, no. Mahadev Bharadwaj is very alert today and see, it's like tennis match. The minute I'm sending it to his part, he is immediately sending it back to me. No, it is 90%. What is 90%? Okay. Hitesh ji, how come you are saying yes? Yes for what? Can they proceed? See, two conditions are to be satisfied simultaneously. Majority in number representing 90%. See, suppose I were writing an answer to this question in the exam. You know how I will write this? Let us see. No, they cannot proceed for the FS less than 21 days because it is 90%. No. Instead of saying 90%, why don't you say less than 95%? Don't you think? See the difference between how you can write the answer, na? You are telling 90%, which is the correct number. 45 lakhs is 90% of 50 lakhs, whereas the required percentage is 95. Correct? So, no problem. No, they cannot proceed as they are in majority, but hold exactly. Akash Nil gives it correctly. Of course, you can write 90%, which is less than 95% like that. Okay? The paid-up share. No. No. Yeah, good, no problem. But when you are writing the exam, write it in 4 distinct parts. Answer in the exam should be in 4 distinct parts. First one, Navayug Chemicals Limited is planning to hold its annual general meeting on 28/9/2021. The company wants to circulate the financial statements less than 21 days before the meeting. The company has a paid-up capital of 200 members and paid-up capital of 50 lakhs consisting of 5 lakhs. You are only representing the facts. Then, according to the Companies Act 2013 or according to whatever nonsense section 136 of the Companies Act 2013, if the company wants to circulate financial statements less than 21 days, they have to obtain the consent of. You can write this. This is the answer. The law. Okay. In the case of Navayug Chemicals Limited, the number of members consenting should be not less than 100 and 101, and they should also hold 47,50,000 capital. In this case, though the number is more than 100, now applying the law to the facts, though the number is more than 101, within bracket 160, such members are holding only 45 lakhs, which is less than 95% of the paid-up capital. Therefore, the company cannot proceed. So, answer, can they proceed? No, they cannot proceed, is the point. Correct. Okay, Mr. Bharadwaj. Why are you putting okay, sir? I don't know. Thank you. Good. Excellent. Now, moving on to see, this provision applies only to listed company. The provision we have seen up to now is applicable to all companies. This provision is applicable only to listed company. Okay. The listed company should ensure that copies of documents, all these documents, financial statement, auditor's report, blah, blah, are available for inspection at the registered office during working hours for a period of not less than 21 days before the meeting. So, anytime you want to have a look, you can go to the registered office and have a look. Along with it, a statement containing all the salient features of such documents in AOC 3 or copies of the document is sent to every member of the company and every trustee for the debenture holders of the company. Okay. And the statement is to be sent not less than 20. So you can simply send only that AOC 3. The full documents can be kept in the company. The statement is to be sent not less than 21 days before the date of meeting, unless the shareholders ask for full financial statements. Okay. See, AOC 3 is a convenience. Instead of giving the entire statements, you can give. But today, thanks to digitalization, companies don't mind giving. Because earlier, the problem was we had to print it and send it to them. And cost of printing, cost of postage. Today, email, PDF. I just have to ensure that it's done properly. There may be a cost of designing it and, digitalizing it and all that. Okay, chalo, no problem, we do that. And then we will simply email it to all of you. And for that, there is a clear-cut indication. Okay, I'll talk about that and then I'll come. How to circulate it? All listed companies and public companies which have a net worth of more than 1 crore or turnover of more than 10 crore, okay, can send it by electronic mode, provided the shares are held in dematerialized form. If the shares are held in dematerialized form, see, listed company, 100% it will be held in dematerialized form, right? If you are the shareholder of listed company, if you are still holding physical shares, sorry, you will not get annual report. You should get it dematerialized, have a DP account wherein there will be a registered email ID. To that email ID only we will send. Sorry, because that has become a rule now. You cannot say, no, I am a shareholder, blah, blah. We told you now, 100 times you told you, get it dematerialized. Many old dinosaurs will still want physical copy. No, sir, sorry. If you can't read a PDF on a tab, or if you can't read a PDF on a mobile phone or even on a laptop, sorry, it's better that you don't own shares in companies at all. What we would say. Because see, today everything, Karlo Dunya Mukti Mein, said the great Dhirubhai Ambani said, Karlo Dunya Mukti Mein. My world is here in the palm. In fact, there's something called a palm top in those days. Okay, should be able to read it here instead of asking for physical copies and all. In fact, in my office, we discourage printing. We only see on the screen. Corrections are done on screen. Everything is done on screen. Then finally, one fair copy is printed because still the government departments want physical copy with sign. Therefore, we print. Otherwise, no printing. Okay. So where the shares are held, so this is electronic mode. If you want to send it, then you should be a listed company, no problem. Or a public company which is having a net worth of more than 1 crore rupees and turnover of more than 10 crore rupees. First question, are the shares held in dematerialized form? Yes. Then electronic mode. Straight away you can give it by electronic mode, meaning you can send it to the registered email ID. The email ID which is registered either with the company or ID. See, even the companies today rely on the DP ID. See, the depository participant account is there now. That DP account will have a registered email ID. To that email ID, everything will come. And the bank account which is designated there, all your dividend, everything will come to that account. In fact, that way, it's so easy. Once you have a DP account, everything will come into that. You do not have to bother. In those days, sometimes dividend warrant won't come. We'll have to go and beg the company secretary. Then he will issue duplicate. All nonsense. Dematerialization that way is the great boon for capital market. No doubt about it. Okay. In fact, this is a question which was asked in those days in BCom. BCom, they used to have security markets on paper, where this is one of the questions. Dematerialization is a great boon for the Indian capital markets. Discuss. Like that, they will ask questions those days. Nowadays, such questions are all silly. Nobody will ask such straightforward questions in the CA exam. Okay. Suppose your shares are not held in dematerialized form, then you can get the consent from the member and an email ID. And even if it's not in dematerialized form, you can send it to his email ID, provided he gives his consent. If such consent has not been obtained or given, then even for these companies, it has to be dispatched. Physical copies are to be dispatched. Okay. But see, I still have a doubt. Let me check up and get back to you, because I have a relationship with a very large listed company. I'll ask them what they do for non-dematerialized shares. Physical shares are still held in some companies. Whether they send the annual report, I'll check up and tell you. But I have a feeling that legally there is no binding, because after all, we are a listed company. All shares have to be held in dematerialized form. Fellow is not converting it. It's his problem, yeah. For him, I cannot send to his physical address. I'll check up and I'll get back to you on this. It's a very practical question. I'll check up with the company secretary of that company. See, though, I might be a little giving you negative comments about company secretaries and all, most of them are my students. About almost every company secretary today would have been my student in the southern region, not in India, not all over India. In the southern region, at least Chennai, Coimbatore, you will find they know me, because I would have taught them something or the other. If not law or accounting, I would have taught them HR. I would have taught them leadership or communication or whatever. Something I would have taught them. So I know them well. You just have to call up and ask what will be the procedure. Do you send it or not? See, it is not necessary that question should be asked only by student. Even faculty can have question. Okay. So this question, I am raising it myself and I will clarify it in the next class. Whether if it is a listed company, the shares are not held in dematerialized form, what should I do? Okay. So, but that will be a very, very small percentage because compulsory dematerialization has come. And if these guys want to even sell it in the market, they have to get it dematerialized. Otherwise, they can't give valid delivery in the market. Physical shares, you can't give in the market. You can't sell in the share market. Offline maybe, but even there, see who will buy it from you. Yeah, see the guy buying it from you has to get it dematerialized, for which there will be a delay. So he will say, sorry, I can't pay this price. I'll pay only 10, 20 rupees less. Something he might bargain. So better you get it dematerialized and sell it in the open market, right? Seriously, I don't know why these guys don't dematerialize. Coming back to this inspection of financial statement, etc. See, we remember when we saw meetings, we spoke about inspection of members register, etc. So similarly, the financial statements can also be inspected, and companies should allow every member, debenture trustee, okay, to inspect the documents at the registered office during business hours. In case of subsidiary companies, the holding company shall provide a copy of separate audited or unaudited financial statements in respect of each subsidiary to any member of the company who asks. So if you are a member of a company and you want the standalone financial statement of the subsidiary, if you ask, they have to provide a copy. Okay. So this is the right of inspection of financial statements. These are all rights of members. Of course, here also there is a punishment. Company 25,000 and officer 5,000 penalty. Right. Now, friends, we have come to a nice area. We have a lot of time. My target is, I think, can be achieved. Let's see the questions and then I will give a small break. Can the company appoint, Ankurji, can the company appoint more than one trustees for the debenture holder? Definitely, more than one trustee is possible. You can have 5 trustees, 6 trustees, what is that? More the merrier. Because all of those fellows, you have to pay them fees and all that. So it's up to you to decide how many you want. Rule 11, does net worth refer to pay? Yeah, net worth, wherever used, it is defined in the Act. Net worth definition is there. You have studied it in the definitional sections. That definition only will apply. Okay. Right? I'll check it out and I'll even get it for you if you want. Show you the definition. Yeah, same definition as given in the Act. Okay. Let me see if I have it. Must be having it somewhere. 1 minute, sir. 1 minute. Okay, bye. 1 minute. Let me check. This is the definition. Let me check net worth. Net worth is defined in Section 2, subsection 57. Aggregate value of paid up share capital, all reserves created out of profits, securities premium account, and debit or credit balance in P&L account. So net off. If there is a debit balance in P&L account, that will be reduced. Then after deducting the aggregate value of the accumulated losses, deferred expenditure and miscellaneous expenditure not written off as per the audited balance sheet. It does not include revaluation reserve, write back of depreciation and amalgamation. Same definition. Whenever you see the word net worth, automatically this is the definition that you have to use. Okay. Thank you for that. So let's have a small break, after which we will come back for further discussion on financial and main reporting. 10 minutes, sir. 10 minutes. Okay. Welcome back from a break. I hope well deserved. And moving on with our topic, which is we were seeing the manner in which financial statements are to be circulated. First, we saw the time duration and the exemption. Then we saw the methodology or the medium, and we said electronic mode, provided the shares are held in. And this is only for listed companies and public companies having net worth of more than 1 crore rupees and turnover of more than 10 crore. 1 crore rupees net worth and 10 crore turnover, and two combinations. Okay. Now, the copies of the financial statements have to be filed with the registrar. Friends, 137 and 92 are very important sections. Why? Because filing of annual return and filing of financial statement. Both are important. Okay, all companies have to do this. In fact, this is one of the ways in which the MCA knows that the company is alive. If for continuous 3 years the company does not upload its financial statement and annual return, the registrar can strike off the name of that company as a defunct company. They will start the proceeding for striking off. Also, the penalty will be, in fact, if a company does not file annual return and financial statement for more than 2 years, then the filing costs, including penalty, late filing and all, will be tremendous. Plus, you got prosecution, you have to go for compounding, all that. Which is why, when many people come for incorporation of companies, I suggest to them, don't start. Because if you cannot comply, don't do it. If you are not comfortable with compliance, don't do it. Every year you have to do it, compulsory. All our clients, very clearly we tell them, boss, whatever you do, even IT return, you don't, but IT return also, if you don't file, you cannot file it now. Belated return, if you don't file, beyond that, nothing can be done except 119 petition, all very difficult, very, very difficult. And otherwise, you have to wait for 147 or 143, where he'll give you an opportunity under 142. All that is very, that's by then it's too damaged. So compliance is the whole key to, going forward. We also insist. So we also say, this is how it is. We have finalized the audit, mainly income tax return we have filed. Job is not over. Company secretary is there. You will have to pay him a fee or her a fee. Then they will upload the annual return. Sometimes the annual return has to be certified. We already saw that certification. Then it will go. They will upload it. For that, there will be a fee to the ministry and to them. You have to pay all that. It's cost of compliance. See, definitely there is a cost of compliance. No doubt about it, my dear friends. But the cost of non-compliance is far greater than the cost of compliance. You have to help the management of your company or the client, as the case may be, to understand this. Once the client understands that the cost of non-compliance is prohibitive in today's world, compliance is easy. It may be a little difficult at the time. So it's the same as, suppose somebody has a Mercedes-Benz car and don't want to pay annual insurance. Now, definitely not immediately you'll have a benefit of not paying the insurance. But if something happens, that is tremendous, right? The cost is too much. You have to bear the whole cost, right? Something similar to that. I'm not trying to compare the two. They're different. But then, in many cases, immediate cost may seem a little high or may be seen as unnecessary. But the protection that you get will be tremendous. I mean, why I'm giving this lecture to you, why I'm unnecessarily or as somebody will say, useless information. No. This is a practical senior professional in the profession telling you how to convince a client. See, knowing this section, any donkey can learn. Yeah, I'm sorry to use that word, but anybody can learn the section, mug up and vomit. Yeah, even Swadiji will just mug up and vomit. That's not a problem. Subject will be there. But the nuances, when you become a practicing chartered accountant or when you become a CFO of a company, how to convince your management. This, the institute cannot teach in the examination syllabus. This you won't find in the institute study material. This you can learn only from a senior member who will give it to you in whenever it's convenient to him. It's not on demand, on tap. Unlike, the VCC, you can always, LCC, you can always download and whenever you want, you can watch it. Such on-demand facilities are not available for mentoring and practical experience sharing. It happens when it happens. If you're lucky, it will happen to you. You take it. Okay, I've been extremely lucky. I've got some brilliant chartered accountants who were my mentors, and they gave me inputs beyond the syllabus. Again and again, stupidly don't think only syllabus, mugging up, vomit, getting marks. Man talking to you is a rank holder. You know that. That is easy. The overlay of the practical knowledge. Please, I know some of you will get angry with me. Unnecessarily, I'm talking. I feel bad. But what to do? Buddha Hana. So I'm telling you this. Please, don't be so locked into this exam clearing syndrome that you ignore the real value addition that this institute can give to you, which is practical. Okay, this is not a university exam or some kind of a IAS and entrance exam, or NEET and all, where you mug up and vomit and then you become an IAS officer or whatever, engineer or whatever, doctor, whatever. No, our course is totally different. It is a practical course. We are producing members, not qualified chartered accountants. We are producing members to the institute. And there is a portion of difference between a qualified chartered accountant and a member of the institute. Okay. Good. So moving on. So the point here is, it is the duty of the company to file the financial statement with the registrar of companies. Right? Do you remember what is the number of days within which, Somesh Karat gives me 2 subsection 57. Thank you, sir. So nice of you. So, annual return should be filed with the registrar within how many days? Question. Now, this is a question. Now it's a knowledge-based question. Now you are comfortable. Okay. It's not practical or it's not experience-based. This is knowledge-based. How many days? Within how many days should the annual return be filed with the registrar? I taught it to you. Section 92, I taught it to you. Unfortunately, I can't give an MCQ. Okay, MCQ. Okay. Annual return should be filed within 30, 60, 45, 15, 15. 30, 60, 45, 15, 15 days. A, B, C, D. A, 30, B, 60, C, 45, D, 15, 15. Which is the correct answer? Hitesh, you want to check up the answer and then get back to me? Okay, good. We will see the answer later. Here, that it is 30 days. And okay, now you are holding the AGM. First of all, the question, was the AGM held? Answer, yes, it was held. Then 137.1 will apply. It was not held. 137.2 will apply. Okay, so there are two groups of people. Some who are saying 30 days, some who are saying 60 days. Who is correct? You go and check it up for yourself. I taught you. Once I have taught. Only asking you here because it is related. Akash Neel and Dhanupriya are saying 60. Others are saying 30. 30 is a nice number. It's easy to remember. Right? Anyway. Okay. So, where the AGM is held, then the next question we will ask you, was it adopted? Means, did the members adopt it? See, sometimes the members may not adopt it. See, boss, you are the board of directors. You have held the AGM. You have given the accounts to them, audited. Now these guys are going through it and saying, we won't adopt. What can you do? But very rarely this will happen, no? Not adopted is a rare occurrence. Rare occurrence. But it could happen that such an option is there. The members may disagree. Suppose the board of directors are a minority group. The majority group, 70% holder is one man. He attends the AGM. On a poll, he says no. All those in favor of adoption, he won't raise the hand. He will ask for a poll. On a poll, he will win. Not adopted. For reasons. See, in those cases, suppose the shareholders do not adopt the accounts, that is all. That company will get into investigation straight away. This is one superb route for investigation. Immediately the central government will wake up. What? Not adopted. Question still doesn't help a person who doesn't know the answer. What happens in multiple choices, you can bluff around. Students. Only students who are not sure of the answer will like multiple choice. Because there, they can play around and by chance they can get one or two answers right, but it's very risky. Very risky. We use a multiple choice question for selecting people in my firm. Very tough questions are asked in accountancy and GST, tax and all that, for which they have to choose answers. The reason we use MCQ is selection. So we are more concerned about whether he knows it. There are also some bluffers are there. They will bluff and they will get. So there in those cases, that is why interview is there. During the interview, those high scorers will really look at them. Hey, you got a word. So see, out of 15 questions, if a guy gets 4 right itself is great. So tough. If a guy's got 7 and all right, we really want to know who this guy is. And we'll ask him certain questions. That's when he'll be in trouble. Because here he got through with bluffing. In the interview, he can't. There he'll get caught. He doesn't know a subject he's got. And we'll ask him how you got all this right. Then he will accept, sir, I guessed it like that. See, for that honesty itself, sometimes I've had a guy because I'm hiring at the lower end. Untrained people I'm hiring and training them. So those cases I don't see. Chalo, okay, don't do this again. If you don't know something, ask that, and we take him on in good faith. But I'm saying, yeah. Somebody, Somnath Karat is saying, Somesh Karat is saying, I'm having a lag. Chalo, unless the rule is simple. There is a technical support person observing my video. In case there is a lag, it will only be he who will inform me. Nobody, if other people inform, I will be wasting your time reacting to this. Chalo. Coming back to the, I know, sir, unless you object, I will not come there. So please don't put video lag comment in the query pad, Bhaiya. Reason is it could be your side also. It could be my side also. Unless I am informed, I will not do anything. And that will be done only by technical support person when it is obvious. So if it is a lag in video, pray to God that everything should become all right. Hold on and be there. That's all. Don't go away. Okay. I know it's very irritating to watch when there's a lag. I understand I'm empathizing with you, but you also should empathize with me. What can I do sitting here? That is why sometimes I used to say, in our Hindu philosophy, in our Hindu religion, we have so many gods. We have 33,000 crore gods. Okay. We have a god for every element. We have a god for Agni is there for fire. Varuna is there for rain and water, sea. Like that, we have Indra is there for rain. Like we have so many gods. And so we think one more god has to join now. Okay. For internet. The god of internet. Okay. The god of connectivity. The god who ensures that connectivity is always there. So I think in those days, our ancient ancestors used to pray to Agni and others. I think before we start an online session, we have to pray to this God. Possibly Agni himself, because there again is fire, but then we can have a new God. What is there? We have the choice. As Hindus, we have a choice. We can go one more God. I can have one more God to control this. And I can pray to him and say, please ensure that the connection is there. Sahana vavatu, sahana bhunaktu. Let the connection be strong. I think that should also be one more word. Let the connection between us be strong. That's what Sahana Bhavatu, Sahana Bhunaktu, Sahaviryam Karvavahai, Tejasvina Vaditamastu, Ma Vidvisavahai, Ma Vidvisa. That's actually a prayer. Ma Vidvisavahai means there should not be any disturbance in our learning. Disturbance could be due to conflict between you and me, or it could be due to an external disturbance like video lagging, connectivity and all that. So my answer is only to pray. That's all. And if necessary, pray to the appropriate God who will take care of connectivity also. As usual, my one of my usual, useless statements, but I hope you liked it. In fact, I used to pray sometimes to Hanumanji and say, today there should be no problem, Hanumanji. My connectivity should be good. Students should understand what I am saying. With that prayer, we have to believe in God. What do you say? Chalo. So, not adopted in the AGM. Then you can adjourn that AGM. They give one more chance. Adjourn it. If in the adjourned AGM also it is not adopted, then it should be filed within 30 days of the AGM. And the registrar takes them as provisional in the records. So first AGM you hold, it is not adopted, you file within 30 days of that AGM. It will be recorded as provisional. Then you adjourn the AGM. At the adjourned AGM, if it is adopted, then the adopted accounts can be filed within 30 days of the said meeting. Suppose at the adjourned meeting also it is not adopted, provisional. That's a big problem. Huge problem. Not adopted. Adjourned meeting also not adopted. Then the ministry will call. What happened? Auditor will be called. What happened? Then the members also will have to tell why they are not adopting. Okay. But if it's a silly, frivolous reason, then nobody can do anything. It will be excused. That's all. But if they have a valid reason, then it will go on to investigation. Right. AGM is not held. This is a classic situation. Even if the AGM is not held, you have to file the documents along with the statement of facts and reasons for not holding AGM. Maybe there was a earthquake in your area, cyclone, some problem, so that physically you are not able to hold the AGM due to weather conditions, heavy rain. Your registrar office is flooded. For 45 days recovery, nothing could be done. By then the AGM date is gone. Whatever. But still within 30 days you have to file with the ROC, 60 days you have to file the annual return. Okay. So where it is not held, then the financial statements and annual return should be filed within 30 or 60 days as the case may be from the last date before which the AGM should have been held. So if everything is normal, when you should have held the AGM, that last date, from that date within 30 days for financial statement, 60 days for annual return, right? Got it? So this is the provision. Now, there is something called extensible business reporting language, right? XBRL. Now, XBRL was introduced. It's an international concept. Even before the 2013 Act, XBRL had come. Even before the 2013 Act. Even the 56 Act, XBRL had come. XBRL is actually part of, where every, the financial statements, while updating it, there will be a language by which, once they is in that coded language, it becomes easy for machines to read it. So when somebody is writing a bot for collecting financial data of companies, for them, it's easier to pick data. So once XBRL is there, once these accounts are uploaded in XBRL, then automatically the bot will know where to go and get the sales, where to go and get the capital, etc. So when somebody is writing a bot for analysis or picking up data, etc., then if it is in XBRL, it will be useful, easy for them to collect. That is why they use. So, for you, from your perspective, what you should know, which class of companies should file their financial statements in e-form, in AOC for XBRL. Okay, first of all, companies listed with stock exchanges and their Indian subsidiaries. So, foreign subsidiary of a listed company, no need to have an XBRL. For foreign subsidiaries, the Situation itself is totally different. You only consolidate it and give it. That's all. Okay. So, companies listed with stock exchange and their Indian subsidiaries. If you are a subsidiary of a listed Indian subsidiary of a listed company, XBRL compulsory. See, this is a very one thing I'll tell you. One of the most useless activities. According to me, nobody uses it, or maybe they use it at a higher level. I don't know, but compulsorily it has to become XBRL, and it has to be uploaded in XBRL form. Okay. At that time, it was told as a great opportunity for chartered accountants and all that, but today it is a great opportunity only for our friends, the company secretaries. They will put it in XBRL format and they will upload it, for which they will charge a nasty fee also, additional fee for them, better pay. Non-compliance is a problem. Okay. So, companies listed with stock exchange and their Indian subsidiaries, companies having a paid up capital of 5 crore rupees or above, companies having a turnover of 100 crore. See, if nothing is mentioned, it's or. I think or is there. Companies having paid up capital of 5 crore or above, or companies having turnover of 100 crores or above. All companies which are required to file the financial statements in accordance with Ind AS. See, Ind AS convergence, I'm sure you have studied it in financial reporting. Ind AS was made applicable to all companies in a phased manner. Now it is applicable to all listed companies, companies having more than 500 crore turnover. Everybody has compulsory now. So that is Ind AS. So if a company has to comply with Ind AS, then such company should also upload in XBRL. Okay. Companies which have filed their financial statements in XBRL shall continue to file their financial statements and other documents, though they may not fall under the class in a succeeding year. Once if you are in XBRL, you are in XBRL. Okay, is the point. So from our perspective, what we should, for this topic, company law, you should remember which companies, have to comply with XBRL format. So, okay. What is XBRL, how to do and not? Maybe you'll learn it. I don't know. I don't know if you even learn it anywhere. Okay. Now, I'm not having any queries for a long time in the query pad. I'm getting worried. Okay. Just one of you quickly put a query to say that query pad is working. Because after Somesh Karat's lag comment, nobody has put any comment here. So just check up. Now, for other companies, the time is 30 days, right? For one-person company, the financial statements have to be filed within 180 days from the closure of the financial year. 180 days time they are giving for OPC. Because who is involved there? Only this guy. Chalo, you file it within 180 days is what they are saying. The copy of the financial statement is to be filed with the registrar. See, the company having subsidiaries, if it is not audited in the country of origin, then for those subsidiaries, you have to file in India in a format similar to the format prescribed in Companies Act. That is Schedule 3. Suppose, see, for example, there could be a company in some Balkan state, we don't know, Moradavia, where, there is no audit. There is no Institute of Chartered Accountants also in Moradavia. They won't come under me. I don't think they come under the EEC also, European Community. So in those cases, they may not have any audit. You may have a subsidiary in Moradavia, then you will have to file the accounts of that subsidiary in the format prescribed under the Companies Act. And in case it is not in English and it is in some other language, then it has to be filed along with the translated copy, right? Non-compliance with Section 137, any of these provisions, XBRL, filing, anything. You notice one thing, every section here will have a penalty clause. Okay? So, fine of 10,000 rupees. For the company, in case of continuing failure, 100 rupees for each day, subject to a maximum of 2 lakh. For MD, CFO of the company, if any, or in their absence, any other director who is charged with the board, or in case no such director is there, all the directors of the company. So, first shot MD and CFO. If they are there, then they are liable under this section. No MD, no CFO. Then, is there any director who has been charged by the board with the responsibility of finalizing financial statements? Then that gentleman or lady. No such person. Then all the directors collectively liable for individual. Each person has to pay a fine of 10,000 rupees. And in case of continuing failure, 100 rupees for each day up to 50,000. Though they are all collectively liable, each one has to pay 10,000 separately. Okay. MD also has to pay. CFO also has to pay. Now we move on to another interesting area. Reopening of accounts on court or tribunal order. Reopening of accounts. Normally, the accounts of a company shall not be reopened, revised, or recast, etc. once it is laid at an AGM and approved by the members. Right? Reopening is possible only under the provisions of this section. It's a very new concept introduced by the Companies Act 2013. It was never there in the 56th law. There was no question of reopening and etc. But now they are saying it's possible. And once an order is passed under this section for revision or recasting, it shall be final. So basically, this situation will arise only when there is some problem, some fraud, something, then only they take this up. Now, order for reopening shall not be made in respect of reopening for a period earlier than 8 financial years. Why 8? Because we are asked to preserve only for 8 financial years. Correct? I'm asked to preserve only for 8 financial years. You remember? Preservation of accounts only for 8. So how can I go and reopen? So you cannot ask me to go and reopen and do it before that. Where a direction has been issued by the CG for keeping of books of account for a period longer than 8 years, then if the investigation is going on and the central government has said you cannot destroy it, 8 years, even if 8 years is over, you have to keep it, then those companies you can ask them to reopen and recast, revise even beyond 8 years. Other than that, 8 years is over, then no reopening. See, again, this you should understand, this provision is a fallout of Satyam. It is a fallout of Satyam. See, in Satyam, what happened, our fellow friend Ramalinga Raju and the auditors, they had falsified the accounts. Not 1 year, 2 years, 3 to 4 years they had done it. Now, all these 4 years accounts are wrongly stated in there. Now, our friend comes and says, it was all fraud, like that, he sends a letter to SEBI. Now, chalo, agreed, we have investigated, we have put him in jail. What happens to these accounts? It has been adopted by the shareholders wrongly. So here, they are saying, in those cases, an application can be made by central government or SEBI or income tax authorities or any statutory regulatory body or any other person concerned. Could be at the investor association or members, whatever. You should be concerned. What is your concern there? And you should say that any one of these people, central government, SEBI, income tax authorities, statutory regulatory body, any other person concerned should make an application to the court or tribunal. See, understand one thing. This will not be done by the company. Company will not want to reopen, revise and all. Why would they want? Because you will be seeing voluntary revision later. Voluntary revision is possible. But application is made to the court or tribunal. Then the court or tribunal will hear the case and they'll say, oh my God, fraud has happened. Then they will pass an order to the effect that the relevant earlier accounts were prepared in fraudulent manner. Affairs of company were mismanaged, casting a doubt on reliability of accounts. See, this is a classic knee-jerk reaction for Satyam. I am 100% sure this provision after Satyam would never have been invoked. No other company they would have invoked this provision. But it is there. Just to show that they have taken action for Satyam, they have put it here. Anyway, suppose tomorrow some other company makes such a similar fraud and accounts are wrongly prepared and adopted, foolishly shareholders also, auditor also colludes, then now you have the power to go back and revise. Because you can't have false accounts, right? So that has to be completely corrected. Okay. So they will serve the notice on everybody, applicants and other persons. Any representations will be taken into consideration and finally pass an order for revising or recasting the accounts. Once that is done, again the company has to put it before the members and get it adopted. Okay. Now, this is application for reopening by other parties other than the company. Now, sometimes the company itself may feel that there is something not complying with section 129 or 134. Once you say 129, 134, straight away schedule 3, everything, anything which is not, it's not complying with that or director's report, then it appears to the board or to the directors that the financial statements or board's report does not comply with 129 or 134. They themselves realize it. They made a mistake. Now, board may prepare a revised financial statement or board report revised in respect of any of the 3 preceding financial years. 3 preceding financial years. And can apply to tribunal for prior approval. So they have to get the approval of the tribunal and then only do it. Tribunal shall give notice to the central government and the income tax authorities and shall take into consideration the representations, if any, made. Because at least they are put on notice. Suppose this company is upwardly revising its income, okay, and saying this was left out, then the income tax authorities would tell, oh my God, is that so? Then how about the tax on that additional income? They will immediately reopen the assessment under 147 and all, provided that your time is there. So on and so forth. Okay. The copy of the order of the revised financial statements and board report should be filed with the registrar. Okay. See, technically nowhere it is said that it has to be adopted. Therefore, I will take back what I said. You can simply revise it and file it without adoption. What I feel. I don't know. Let us see. Maybe some more clarification come later. See, this is a very interesting sentence in the Act. Such a revised financial statement or report shall not be prepared or filed more than once in a financial year. Now, wait a minute. Suppose I am revising the financial statement for 14 and 15. I can do that. 14 March, 15 March. I am revising it in 22. I am revising it in financial year 22-23, right, sir? For 14 and 15. We can do that. Nothing wrong in that. Okay. I'm sorry. 3 preceding financial years, right? So, sorry. I'm sorry. I stand corrected. I will restate my problem. 22-23. So, 21-22, 20-21, 19-20. These 3 can be now revised. Let us say that I'm revising 19-20. 1920, 2021. Okay. During pandemic, some mistake has happened. So 1920 we have, 2021 we have. So you want to revise, no problem. So in 22-23, I revise it. Now, 23-24, again I notice one more error in 1920 and 2021. Can I revise it? Same year, 1920, 2021, one more error is there. Can I revise it on 1/4 or 2/4, 2023? Now, it looks like it's possible. It looks like it's possible because words used are revised financial statement or report shall not be prepared or filed more than once in a financial year. See, I think their intention was should not be prepared or filed for more than prepared or filed more than once for a financial year. No, they have not said that. They have said more than once in a financial year. So I can take up the same year so long as the revision is not done in that year. It should be done in the next year. Like that. So 1920, 2021. Now, 22, 23. Okay, 23, 24. I can revise 2021. 1920 I cannot. Immediately preceding 3. 2021 I can. 1920 I cannot. So for 23, 24, it will be 20, 21, 21, 22, 22, 23. But 2021 I can. Again, second time. That's how it looks. this was a question. See, this is not my own thinking. I'm not as intelligent as some of my students. One student raised this query to me offline, and I answered that query. That's why I'm able to discuss it. That's why, I encourage queries from intelligent students like you, because sometimes we might miss a point and you will be able to point it out and can take it up. The detailed reasons for the revision of such financial statement or report shall also be disclosed in the board's report in the relevant financial year in which such revision is being made. Where the copies of the previous financial report have been sent out to members or delivered or laid before the company, the revisions must be confined to the correction in respect of which the previous financial statement do not comply with 110 and 134. The making of any necessary or consequential alteration. So you can't go beyond that. Whatever is already done, only you can go. You can't totally change it. Especially in the board report, suppose you forgot to mention something, now you can't come and mention it. Or something was left out which has to be given under 134, you can give it here. The central government can make rules for this with relation to revision and all that, and make different provisions according to which the previous financial statement are placed or supplemented by a document indicating the corrections to be made. Make provisions with respect to the functions of the company's auditor in relation to the revised financial statement, because definitely he has to give his view, right? Because to the extent of the revision, he should say that my report covers this also, or I'm giving a fresh report. Require the director to take such steps, including, I feel, the AGM should be held and that should be adopted. It's not AGM, a general meeting should be held and we have to adopt. See, we now come to a topic called NFRA, National Financial Reporting Authority. This is again sort of a Satyam offshoot because of Satyam. Satyam may bring about so many changes in the Companies Act. Not now, in 13 Act. This happened in the 56 Act itself. See, after the Satyam scandal took place in 2009, the NFRA was formed. Okay. That is, the concept of an NFRA was already brought about, but it was not formed. Then Companies Act 2013 gave them the opportunity to give the regulatory framework. Then it was adopted in 2018. And NFRA was established as an independent regulator. Okay. It's now there, but at the time when the 13 Act was enacted in Parliament, there was no NFRA. Okay. The role of the NFRA is advisory and regulatory. Okay. So the NFRA will make recommendations to the central government on formulation and adoption of accounting and auditing standards. It will monitor and enforce the compliance with standards, oversee the quality of service of the provisions, and suggest measures required for improvement. Are you able to understand where this is coming or what they are trying to do here? I don't want to go there because you are all intermediate students. But then, thanks to Satyam, one scam, our entire profession was put to shame. Okay. And because of that only, this NFRA has become so powerful. Because they say, you guys are not capable of controlling. You guys don't know how to control your own member. You will let him go. Therefore, in case there is any quality of service failure by a member, we will take care. Like that, they usurp the powers of the institute and they say, we will oversee the quality of service. See, all that is fine. Key custodes ipsos custodius. Of course, who will police the policeman? Correct. But then, who can police the policeman? That is a real question. Who will police the policeman? Correct. NFRA may. Who can? See, suppose a very brilliant surgeon has conducted why brilliant? An above average surgeon has conducted an operation which is reasonably correct. There may be one minor negligence in the procedure, yeah. Even that he will know. No, in fact, his students looking at it may not know. Even another medical professional may not know when he is looking at it because he will be suturing it correctly. It's a small missing out, it might be under microscope, it will come out there. Now, who can tell that? Only another surgeon can tell that. Unqualified person cannot come and comment about whether that surgeon has done his job correctly or not, which is the problem here. Who will comment about that quality? one who knows what that quality is. Okay, he should have done it himself, yeah. Only then he can come and talk about it. Okay, this is a real challenge for this role of the NFRA, how they will effectively perform it. And who can sit in judgment over another member? Even our own. Only a peer can sit. Only a peer can tell me, he has also gone through it, I have also gone through it. Now ask him, Baba, you are telling me I should have seen now. Would you have seen it? Then he says, yes, I would have seen it. Then I can listen to him because at least he's got that experience and knowledge. Which I mean, so somebody who doesn't know anything about auditing and accounting, simply sitting there in NFRA cannot decide whether quality is there or not. It's not competent. This is going around and it's understood. That's why it's very difficult for them to get. Again, suppose they take members and put them in NFRA, that will just be again overlaying. See, again only members are going to be there. Whether here or there, same fellow is only going to come there. So begging the question. Instead, they should trust the institution. They should trust the Institute of Chartered Accountants of India for what it is worth. See statistically how many times it has happened that one Satyam is a black swan. The black swan cannot prove that there is no white swan. See, well, definitely, the black swan can prove that all swans are not white. But a black swan cannot prove that all swans are black. Because there are so many white swans around. And there are so many good chartered accountants, so many brilliant chartered accountants, so many honest chartered accountants. One fellow doesn't think, you cannot say everybody is like that and pass a law that will control everybody so stringently. This is a problem. It's a knee-jerk of Satyam. Anyway, the views expressed are the views of the teacher and not the views of the institute or the board of studies. Okay, this is as a member of the institute, I'm giving my view. That's all, and subject to that. Please don't take it as the institute view or official view. I'm a teacher, a member of the institute, a practicing member, and as such, I'm entitled to give my opinion. And in that sense, I'm doing it. Okay, and that too, I'm assuming you're all matured students who will understand what I am trying to say. Let us NFRA. So NFRA can perform such other functions relating to above activities. Right. So Levy Matthew wants me to explain the revision dates. Let me do that because that is important. From the exam point of view, it could be important. See, voluntary revision is possible only in respect of the 3 preceding financial years. So we are now in 22-23 financial year. So preceding financial years are 19-20, 20-21, 21-22. Okay. 19-20, 20-21, 21-22. 3 preceding. So I can revise these 3 in case there is a non-compliance with 129 or 134. I can revise for these 3 years the accounts and the board report. Now, my question was, here they are saying, such revised financial statement or report shall not be prepared or filed more than once in a financial year. So, my question is, this is one financial year, 22-23. Now, we see there is an error in 19-20, 20-21, 21-22. Now, let us say that there is an error in, specifically, there is an error in 20-21. 20-21, there is an error. Okay, immediately preceding 3 financial years, it will come. So this year we revise it. Correction is valid. We do it. Audit also agrees. We get it adopted. We upload it, file it. No problem. Now, so 22-23 over now. Next financial year, 23-24. Can I again revise 20-21? That is my question. Can I again revise 20-21? Second time, can I revise the same accounts? Unfortunately, the wording of the sections seems to permit it. Why? Because it uses the words financial statement shall not be revised or filed more than once in a financial year, which means I cannot revise 2021 again in 22-23 financial year, but in 23-24 financial year I can revise 2021. This is what I am trying to tell. As I am talking, if you write down the dates, you will understand it better. If at all they wanted that once it is revised, it should not be revised at all, the English they should have used is, such revised financial statement or report shall not be prepared or filed more than once in respect of a financial year or for a financial year. If they have used that language, no problem. Since they have used this language, this confusion continues. Okay, this is what I was trying to explain to you. I hope you have understood, Levi Ji. Levi Matthew, if you have understood, kindly confirm that you have understood. I'll feel happy. Otherwise, tell me where you have not understood. I'll explain again. How NFRA recommend the government? How there's a NFRA is a body, boss. They will write. They will send a. They will do all sorts of things. Okay. Correct. Especially the civil engineers. Okay, because so many bridges are falling down, and these civil engineers are only building now. So even about it. See, even let us say that the government is hiring CPWD, they will hire only engineers for inspection and all. So which means only another chartered accountant can audit or verify the work of a chartered accountant. Having said that, it's better that they don't do it. Thank you. Beautiful. Moving on quickly because time is now only 3 minutes more. It's okay. See, these are all pure theory. That is, there should be a chairperson and not more than 15 members. Chairperson shall be a person of eminence, having expertise in accountancy, auditing, finance, law, or law. That is where the problem happens. Suppose an advocate is hired, how will he understand auditing? How can he judge whether the auditing has been done correctly? In which case, what the NFRA will do, they have to hire a firm. I mean, again and again, you are begging the question. You are going back to the chicken and egg situation. That's all. Okay. See, the judge of High Court, definitely an advocate or a senior lawyer, cannot understand finance. That's why what they will do, once the evidence involves a lot of financial data, they will hire a firm of chartered accountants to give their opinion, report on it. I have done that for many times for High Court cases. The lawyer will empanel me with the court, and the court will give me the direction to submit the report. I will go through the accounts and submit my report to the court. And the court will then, using that as evidence, they will take a call. Why I am saying, ultimately, the person having the expertise only can verify. Okay. Chairperson is to be appointed by the central government. The chairperson, and see, then why I made that the tone of voice I changed slightly, because whenever central government is involved, who will appoint? Ruling party will appoint. That means what? I mean, these are where the problem starts. Whereas I am a member of the Institute of Chartered Accountants of India. Nobody can corrupt me. If I say I will not sign, I will not sign. At best, you can hire a supari killer and kill me, but you cannot make me sign. You cannot. Whereas a central government employee, he will simply blindly follow what his boss says. Okay. Whereas a member of the Institute of Chartered Accountants of India is the ultimate example of independence. At best, what you can do, you can kill me. That's all you can do. You can hire a supari killer, or you can send a gunda to hit me, kill me. Other than that, you cannot make me sign a wrong balance sheet. If it is wrong, I will say it is wrong. And I will give my report why it is wrong. See, this is the power of the independence of the institute. And this is the power that is the real value. By saying, by putting all these things, that independence only is being removed. Okay, our need that they should actually help us to be independent. Right? Of course, if any fraud is committed, punish that fellow. If any auditor is guilty of fraud, punish him. Stringently, take criminal action against him. Because you got the right to take criminal action, take it. We will definitely debar him from practice. We will do whatever has to be done. But you punish him. Make him an example in front of everybody. I will also come and I will throw the first stone on that fellow. If you have Islamic law and you are stoning him to death, I will be the first man to cast that stone. But our independence cannot be questioned. Believe me. There are so many honest auditors are there who will not sign. Well, public sector companies and all, they have simply qualified and gone. Okay, I cannot give you certain examples in this forum, but then I'm telling you, that is the independence of a member of the Institute of Chartered Accountants of India. That is why ours is a holy profession. It is not a casual qualification with which you serve kaam ke liye just for earning money. No, it is a holy profession. Okay. The chairperson and members who are in full-time employment with NFRA shall not be associated with any audit firm during the course of their appointment. Obviously now. And 2 years after ceasing to hold that appointment, they cannot be associated with any audit firm or related consultancy firms. Okay. Notwithstanding anything contained in any other law for the time being in force, do you see how powerful? notwithstanding anything contained in any other law for the time being in force, any law, NFRA shall have the power to investigate into the matters of professional or other misconduct committed by any member of firm of chartered accountants registered under the Chartered Accountants Act 1949. Anyway, but then let us also accept one thing. Of course, there is another view also, which many people also vehemently argue with me. They say, Shrikant, you are being so holier than thou and all. But then there are people who have committed frauds. How about them? Agreed. Therefore, because of those few black sheep, all of us are getting affected. Okay. This may be done either suo motu, means on its own motion, or on a reference made to it by the central government. Where the NFRA has initiated an investigation, no other institute or body shall initiate or continue proceedings on this matter. So NFRA has been given a lot of power, lot of teeth, and it's an animal waiting to, feast. It's like a beast, controlled. Once it is unleashed, it can cause havoc. So much power has been given to this NFRA. Anyway, so NFRA is a quasi-judicial body. It will have the same powers as are vested in a civil court under the Code of Criminal Procedure. All the powers of a civil court are there, especially when there is a misconduct proceeding. It will be a quasi-judicial proceeding. So where evidence could be produced, summoning and enforcing attendance of persons, inspection of books and all. So the same powers which are available to the civil court under the CPC 1908 while trying a suit is available to the NFRA, which is a quasi-judicial body. So where professional or other misconduct is proved, NFRA shall make an order for, in the case of individuals, chartered accountant, 1 lakh up to 5 times the fees received. Or in the case of firms, minimum 5 lakhs up to 10 times the fees received. Okay. Also, debarring. See, this debarring, again, of course, once he is debarred here, automatically he'll be debarred as a member also. Automatically disciplinary proceeding and all. See, it's like once this has gone to this extent, fellow is out. He can is no longer fit to be a fit member of regularly organized society. Okay, he is a willfully perjured individual, void of all moral worth, and he should never be respected anymore in good society. Such people we should publicly humiliate them. Only then such behavior will, in this way, I'm a great supporter of Islamic law. Capital punishment. The fellow should be made an example so that people should be afraid again to think of committing a auditing fraud. If any auditor is signing a false balance sheet, fellow's hand should shiver. Such punishment should be given to these people. Because by one misbehavior, the whole profession is getting affected. Anyway, of course, it's quite possible that an innocent person can be framed by the NFRA. And that framed case could be used. Politically, there are so many ways, fellow might have objected to something where somebody is involved, and then in order to capture him, it's happened, sir. Be prepared. All this can happen. You may sound this is something out of the blue. No, it is very much possible. In those cases, I have an appellate remedy. I can go to the NCLAT, the National Company Law Appellate Tribunal. What will happen there? Nothing. Because that is also part of the Ministry of Corporate Affairs. Same fellow is only going to sit there. So then I have to go to the High Court. Then maybe in High Court, I'll get some justice. Then finally in the Supreme Court, I will get a justice. High Court, chances are high. If the High Court judges are clear, they are not bound by the ministry. They are not bound by the ministry, because they come under the Ministry of Law and Justice. And they will not be bound. They can take a call. Sir, I am saying now, unnecessarily this issue is getting complicated. Whereas earlier, Institute used to take care of this. We used to ensure that these guys were punished. We were also tough. It's not as if we were easy going on these people. Anyway, time now is something like 9:35. I don't want to keep you beyond the limit. So NFRA is a little lengthy. Tomorrow we will take it up and finish it. And after finishing NFRA, we will go on to CSR, and then, not tomorrow, sorry. On Thursday, we will, inshallah, complete the topic. Okay. Yes, sir.